right, welcome back. And now there seems to be a battle out there between those who think that the government's actions surrounding Silicon Valley Bank are a rescue versus a bailout, right? And that issue is at $250,000 threshold of federally insured deposits, right? Anything above 250 is not insured by the FDIC. So the Fed, the Treasury, and the FDIC issued a statement late yesterday saying all depositors will be protected, regardless of their deposits. And the money will come from banking fees, not taxpayers. We're bringing in a tax attorney for her views into this debacle. Please welcome into the show, Rebecca Walser. Okay, Rebecca, give it to me straight. Bailout, rescue, or total distraction?
Oh gosh, I'm overall disappointed today, all around, and I'm really super disappointed right now by U.S. investors because they are buying this hook, line, and sinker because we saw the market whipsaw, right, Scott? We started off negative, we had 30 banks get shut down from trading, and now we're whipsawing to the positive. So the bottom line is, of course, it's a bailout, right? Because the FDIC insurance protocol would just be normal standard operating procedure for an insurable deposit, and so it wouldn't be necessarily a bailout. If we're going above and beyond the 250, especially to commercial accounts above 250, and we know that the average deposit at SVB was over 2 million, then we're well beyond the guidelines of FDIC. And I think that is unacceptable because when you look at and you start to look at the clients of this bank, yes, a lot of VC venture capitalist firms, but some are Chinese. So now are we bailing out Chinese corporations that have banks and SVB in the United States? This is a problem, and we don't have it. Let's just keep in mind, maybe your audience doesn't know, but the FDIC insurance value is around $200 billion. So we can't bail out a bank with the entirety of the FDIC funds. And of course, the contagion issue is the bigger issue. And so I was glad to see that the markets were coming down and were upset this morning. And now I'm not glad that it's like, are we the most gullible people on the planet Earth in the history of human time that we believe that our government can come out and say, everything's going to be fine, there's no contagion, it's all fine, and the market goes right back to the positive? This is sad. This is very sad.
Okay, so you're on the same page as me, because I look at things from a little bit of a different point of view than the rest of the market does, and that's why I'm sitting here. You know what I thought? And maybe you will agree. We were told that this is going to be, it's just isolated, it's no big deal, it's a fly on the wall, we'll take care of it. Well, I was expecting them to come out with a fly swatter, but no, they came out with a bazooka, right? FDIC, the Fed, and the Treasury,
Congress,
all together. And Congress, all together. So what I immediately thought to myself was, wow, this must be really bad. I mean, this is they're showing up to a knife fight with a bazooka, and what that tells me is the people behind the people with the knife have a tank, right? That's what that tells me. So that gave me pause for concern. I mean, that was the first thing that I thought is this is not normal procedure. So yeah, you're right. I think that. And another thing I thought about this. Tell me what you think about this. This was a Silicon Valley Bank, right? California, woke. We heard about all that stuff going on at the bank as well. But what if this was the Plumbers and Pipe Fitters Bank of Pennsylvania? Do you think they'd get the same treatment maybe that the Silicon Valley Bank got?
I hate to say no, but let's be honest, Scott, no. I mean, what they're explaining right now, I mean, this is an easy explain, right? They can say, okay, these startups, the IPO, market hasn't been the best in the last 18 months. So these startups that we, expected to get capital infusions by going public haven't gone public. So they've been relying on their own cash flow, which means they've been pulling withdrawals out to fund operations. And that's why, how long have I been on this show, Scott, telling the viewers liquidity is going to be the death nail. That is it. When we get to the point that liquidity is dry, then we are going to see the house of cards collapse. And Powell has himself in such a corner now because the truth is we have already stimulated too much through coronavirus. We have already printed too much. We already have too much in the system, which created inflation. And he was doing what he had to do to get that sort of nipped in the bud, although it was too much, too fast. We know that. But now that this market is having these consequences, Powell's sitting there second guessing, am I going to continue hiking? Am I going to hike 50 basis points? And so now the market is really dictating to Powell. And that is a scary thing, Scott, because if the market gets what the market wants, which is clearly a pause, a pivot, and a re-stimulus with low cost of capital, the way we've been since 2008, 2009, back to the decade of 15% growth in the S&P, which is totally not organic. If the market gets that, the U.S. dollar is going to collapse because it is going to be a hyperinflationary environment. Venezuela, all kinds, Zimbabwe, all kinds of things come to my mind that if we are just going to print to fix the problems that we created by printing, then we are at the very, very, very end of the fiat system. And the fact that American investors are this gullible that the market will shift back, or even the macros, even the actual trading macros shifting back because of what the government has done here, means that they just believe the government can control this and it's not systemic, and they are 100% wrong.
Gosh, I totally agree with that. The mere fact that there's even folks out there that think it could actually be rate cut time is absolutely, to me, just mind-boggling. I'm absolutely flabbergasted, because now we're in a situation, and it's their own fault. I don't know if you agree with me when I say this. I just said it to Dan Giltrude at the top of the show, but I said, we're now in a position where we have to choose between contagion or inflation. Your choice. Right? I mean, that's all we got.
Exactly what I just said.
Yeah.
That's exactly what I just said. If they get what they want and they pivot, you're talking about, I think, hyperinflation, Scott, because we already have too much capital. Now, the M2 money supply, that's a whole nother thing. It's gone negative since January.
Right.
So now we see exactly what I've been worrying about. It is the liquidity that is the end of this thing. When you have a system, just so the audience can understand, because we're talking really technical things now, right? When you have a system whose growth is not organic, who is truly reliant upon stimulus and low interest rates for the longest period of time in the history of America, that system is not going to work as the liquidity is, as the capital is dried up, as you have to live off of your cash flow. We don't have cash flowing operations. How many unicorns did we have that IPO that had no cash flow? That had negative cash flow?
Everybody gets a pink pony nowadays.